Hello and welcome. You're watching BQ Prime, and we're bringing you key post-budget conversation to help decode the nuances of the budget. Now, who better to talk to that than Mr. Finance Secretary himself, Mr. TV Somanathan. Pleasure to have you on BQ Prime. Thank you for talking to us. So it's been a little over 4 days since the budget came out, and it has been well received, particularly on the fiscal consolidation parameter, on the CAPEX target. So I want to begin with those numbers. When we talk about the fiscal consolidation glide path, what does it look like in the next 2 years, and what are the targets that we hope to achieve?
See, we are not giving you a specific target for the next 2 years, but we are saying that it will decline to below 4.5% by 2025-26. So the exact calibration of that between the subsequent 2 financial years is a matter that has not been specifically committed to now, and that is something that will evolve. But between the 2 years, a consolidation of approximately 1.4% of GDP is what we are looking to achieve.
Okay. Coming to the revenue figures, you'd also said that the tax buoyancy this time is not more than 1. You had said that, we're seeing the gross revenue in line with the GDP growth. It has been a conservative approach. What are some of the risks and considerations that are underpinning, along with, of course, the global slowdown is one, but what else is on your mind?
It's mainly, global slowdown is one. That is why we have estimated growth a little conservatively, because some impact of a slowdown elsewhere, if it were to occur. It is not yet clear that there will be a global recession, but there could certainly be a deceleration of growth. And if that happens, it will have some impact on India. It is bound to. And that's why the nominal growth rate that we have assumed in the budget is just under 10.5%. The buoyancy of 1, whether that's conservative or not, well, in terms of this year's buoyancies have been very high, but they may reflect improvements in the tax system, especially in GST, etc., which have happened. But these are not necessarily improvements that will happen every year. So again, we have chosen not to project this year's buoyancy into next year's numbers and have stuck to a buoyancy of 1. Namely, we are assuming that if the economy grows at a particular rate, then taxes will grow at the same rate. I think that's a reasonable assumption. We may perhaps do better, but I don't think we'll do much worse.
Coming to the CAPEX, one of the key considerations has also been the outlay of 1.3 lakh crore to states. Now, this time revised estimates, there was a little dip. The offtake was not as expected. What will change this time around? We're seeing it at from 76,000 to 1.3 lakh crore. What will happen different this time?
Well, one is that we are advancing the whole cycle of submission and consideration of proposals. So we have already written to the states, asking them for proposals on the bulk of that 1.3 lakh crores. And this was issued on the 2nd of February, the day after the budget. So we are hoping to front load the planning process so that they can actually execute the projects faster.
Okay.
Secondly, I hope that because they have now more experience with this approach, they are also more ready to get the work done in terms of compiling the project, sending it to us, making sure that our conditions are met. So there is a learning process which I think they have gone through in the last 2 years, which should make them faster this year. So I'm therefore hopeful that we will see a full utilization of the 1.3 lakh crores this year.
With the planning head start, like you mentioned, is there any change in the untied and tied ratio of this that might incentivize them? There was an 80-20, if I remember last time.
It will remain roughly in that proportion. I'm not giving you the exact proportion, but the bulk of it will remain untied.
Okay.
And some portions of it will be tied to specific policy actions and reforms.
Okay.
In some cases, tied to reform, and then the funds can be used for any capital expenditure.
Okay.
In some cases, they will be tied to specific capital expenditure.
Okay. On one of the points like this, incentivizing was the municipal bonds that
Yes,
was also announced. The RBI report on municipal finances also encouraged that. Close on the heel, we find that in the budget. So what can we expect that? Because in the budget language, we hear that maybe ring fencing of user charges or, property tax reform.
So it is our approach in terms of how the component of the special assistance to states can be used is pretty flexible. The point is, our aim will be to get a number of municipalities to bring themselves to a position where they can raise funds through municipal bonds. This could happen through augmenting their general revenues through property tax, It could happen through creating special purpose vehicles where part of revenue is escrowed, ring fenced, and then use that to raise municipal bonds. So there are multiple approaches that are possible, but in all approaches, there will be a need to improve either municipal taxation or municipal cost recovery and fee collection.
Okay.
So in general, augment the finances of the municipality. It could include things like value capture financing. It could include betterment levies in the vicinity of a metro. There are multiple sources that are open to municipalities. Our aim is to incentivize municipalities to become able to raise financing from the markets, and the nature of the reforms that have to be done to do that are flexible, and there are multiple ways they could do that. There is no particular path that we are laying out. What has been mentioned in the speech is indicative of some of the things that they could do, but the component will be used to give money if certain milestones in raising bonds are achieved. One, actual raising of municipal bonds. Two, there could be something for an intermediate stage, say when they get a investment grade credit rating, or something that is measurable as an outcome will lead to release of funds.
Okay.
But the guidelines on that are yet to be issued. That's
Right.
We are in discussions with Ministry of Housing and Urban Affairs, and a clear guideline will be issued.
I was about to get there. So next, on the similarly on the line of one of the other heads was, of course, the Manrega. There was a bit of a dip. There's been a lot of reactions coming in, civil activists and on-ground people telling that it is demand-driven. You've clarified that time and again before. But considering the trend of expenditure and the utilization, we see that in the first 6 to 8 months it gets utilized. So if that is indicative of the trend, is this keeping in mind that how will that change? What is your thought?
So we expect the demand to change this year for a couple of reasons. Firstly, there's a huge step up in the outlay on Pradhan Mantri Awas Yojana, particularly the rural component, where the step up is more than 100%. There's also a big step up in the outlay for the Jal Jeevan Mission, which is again a rural works program. So we have a huge increase of approximately 40,000 crores coming from two rural works programs, which also employ the same kind of unskilled and semi-skilled labor that seeks employment under the National Rural Employment Guarantee.
Okay.
So because of this increase in demand because of the creation of employment in these two schemes, we expect a moderation of demand for the safety net, which is the National Rural Employment Guarantee. One. Second, the economy has revived and is now at much better levels of activity than in the last 3 financial years, that is 2021, 21, 22, 23,
Okay.
all of which had some effect either due to COVID or the resultants of COVID. And so we also expect that the normal demand, even without these special works programs, will also abate. So the combined effect of the higher outlay on rural programs and a decline in demand due to the improvement in the economy and other job opportunities, we expect demand to decline. But if that projection proves to be incorrect, then we will supplement it at the.
Okay, sir. I think one other key budget announcement that got a lot of interest is, of course, the new tax regime, incentives that
Yes.
were given. So there has been an estimate on how much might migrate. What is the effective sort of migration that you expect here? And I know it's a little early to talk about this number, but just trying to understand here, because many have also opted for many savings and investment plans in the old regime. It's not as easy to discontinue that.
True.
So
They can remain. Nobody is compelled to move. It's a completely optional system.
What income?
Sorry, yeah.
No worries, sir. What income brackets do you see might be more incentivized to pick this up?
So it's difficult to say which brackets exactly, but I'll give you some outline of where it's most likely to happen. I think those whose income is in the range of 5 lakhs to 7 lakh rupees, I expect a very large majority to shift. Beyond 7 to about 12 or 15, I expect a substantial number to shift, because in that income bracket, especially for those in that income bracket who are the primary breadwinner in a family, I would expect a substantial majority to shift, for the reason that for them, there are lots of household expenses that they incur. As a result of which, expecting that they would meet the theoretical savings calculations which you find in the financial newspapers, saying that if you save X, you are better off remaining in the old regime because you'll actually save so much. that amount which is projected in a newspaper as potential savings is difficult for a person with a salary which is in the range of, let's say, 50 to 75,000 rupees a month. To actually save that amount is difficult because they have personal expenses. So I expect many of them to shift because they'll actually be considerably better off in the new system because they have an inability to save to the maximum extent that's permitted. Since they don't save that, they are actually paying more in the old system, and they'll pay a considerably lower amount in the new system. So this is what we would expect in the, so that's the second sort of group, above 7, but below, say, 12 to 15.
Okay.
Beyond 12, the ability to save increases. So many of them will actually be able to save, but there the gains begin to increase also. So I think the middle slabs will be the ones where there might not be too much shifting. So I expect 5 to 7, most of them, 7 to 12, many of them, maybe 12 to about 15, 20, 30. It may not be too much. And then at the highest slabs, people will shift because of the change in the maximum marginal tax rate.
Right.
So it'll be both at the bottom and at the top.
That draws a very clear picture. Thank you, sir. Now, on some of the other announcements that was also made in the budget, say the Agri Accelerator Fund. This is well received for Agri startups. How can we understand the eligibility, or perhaps how will this play out?
The details are yet to be worked out. It's only the, and that will be done by the Ministry of Agriculture. The idea behind it is that startups can play an important role in the development of Indian agriculture in a way that perhaps it's difficult for people to immediately understand, but the potential is there. Let me give you a very crude example, and that's one of the best ways of understanding how startups can actually play a role in agriculture. So we're all used to these, the modern systems of hailing a taxi through an app. So whether it's, any of these companies where you press an app and the taxi is at your doorstep, you get in, you pay through the app, and it finds out the nearest taxi and sends that driver to you. There are a lot of people in rural areas, farmers, who need to use agricultural equipment. It could range from a tractor to a thresher, to a dryer, to a seeder, to a weeder. Lots of these little pieces of equipment which are expensive for a small farmer to buy and own. They would like to hire them. Of course, hiring services exist, but it's the market for these hiring services is like the taxi market in a city before the arrival of these apps. That there's a lot of information asymmetry. You don't know who has it, when they'll make it available. You have to shop around a lot to get it. So if we were to get, say, and this is purely hypothetical example, that if there were a startup who could say, look, on this app, when you need the tractor, it will be there in half an hour.
So it's an agri ride hailing of sorts.
Of sorts. Or if you need this particular piece of equipment, we will be there to help you. This can make agriculture more efficient because it reduces the need to invest in these things. The investment can be more efficiently utilized across many farmers, less idle time. So there is a lot of potential. So the Agri Accelerator Fund is precisely intended to look at opportunities for startups in agriculture. I gave you just a hypothetical example.
Right.
There are many more involving seeds, involving use of the most appropriate inputs, crop measurement, spraying. There were lots of things where the startup approach can help improve agricultural productivity and benefit small farmers.
Okay. And the outlay of this is yet to be...
It's not yet fixed. We will be deciding on that.
Okay, sir. And also well received was the agriculture credit expansion roadmap that you've given for 20 lakh crore. Now, will this be an add-on to the existing schemes? Will it be pushed out through the same way? Okay. Now coming to a little more on the banking side of things, sir. I know in the Parliament, the RBI Act and the Banking Amendment Act is being discussed. We cannot go there. But if we look at past examples, in the past, the regulator and the government has spoken a lot about governance issues in public sector banks. What is your take on whether these issues have been largely solved? And what is the changes maybe you'd like to see in them going forward?
I'm not foreseeing any significant changes in governance in public sector banks. I think that system, with the introduction of the Banking Boards Bureau and the various changes that have been made since 2015, has largely settled down. So I'm not, I don't think any major reforms in the governance of public sector banks are on the anvil. I think they have actually, the reforms have shown their results. You saw the recent results of State Bank of India, banks. There's no bank under PCA now. So I think the reforms have actually worked, and I'm not aware of any substantial reforms that are forthcoming on the public sector bank governance, which you specifically spoke about.
Okay. Okay, sir. Now on small savings, a lot of the small savings schemes have also, there's been a thrust to that.
Yes.
How do you see bankers raising deposits? How will this impact them raising deposits?
It may have some impact, but our purpose here was not in terms of, competing with. Our purpose was to give something which is helpful to particular sections of society in the middle class, especially the senior citizens who need safe avenues where they can get a steady income. So the senior citizen savings scheme is a very popular scheme with senior citizens, and the limits had not been raised for several years. And the aim here is to give them an avenue for safe investment. And that was the primary driver of it, not to raise funds. Or in fact, if you see our estimates for collections from small savings, they're not very significantly higher than last year. They're in fact growing at approximately the level of nominal GDP growth. So this is not something that is done to garner resources from small savings. It's primarily to benefit senior citizens. The 8% rate on the senior citizen savings scheme is higher than what senior citizens can get in banks. And it is a little high for us too, but it is something that we feel is desirable to protect the interests of a section of society that depends on a fixed income. And same with the MIS too. We've increased the limits. So yes, it may have some impact to the extent that senior citizens have, an increased amount that they can place with small savings. But I think if it does have an impact, it will be small on bank deposits. But yes, it could have some impact.
Okay. Now coming to really towards the end, I cannot leave without asking on the disinvestment. And maybe I'll ask this in a way that perhaps what are some lessons you take from IDBI going forward to the privatization of the two banks that's yet to be announced? We'll hopefully get that from the parliament. But what are some lessons you take forward from the IDBI transaction that's ongoing?
I am not too sure that we can draw lessons yet because we haven't successfully completed the IDBI transaction. But there are some things that we have learnt in terms of how to make the transition from a publicly owned bank to a privately owned bank. IDBI is a company; it's not a nationalized bank. So, nevertheless, it has required a lot of regulatory modifications, which the RBI has been approached for, and the RBI has been forthcoming. And that, I think, will be useful to apply in future when any other bank is being privatized. So the way, the manner in which management control will be transferred and when will it transition, and a lot of technical details on the transition, because it's never been done before. No bank in India has ever gone from public ownership to private ownership. Many banks have gone the other way. So this is a road where no one has traveled before. So the IDBI experience, especially in terms of the regulatory changes needed, I think will ease this road is being laid. It will be easier for people to travel on it when somebody else needs to travel.
Okay. Okay, sir. I think that's the broad lesson we can draw at this point, like you said. Lastly, the banks are again at the beginning of another infrastructure lending cycle. What would be your advice to them to sort of avoid the bad loan decisions, perhaps? What would you like to say?
I think the lessons from the last round of infrastructure financing is that there are certain risks which the public sector is better at taking. And the most viable PPP projects are those where the amount of sovereign risks is very low. Risks like land acquisition or permissions or environmental restrictions. Projects where these have been overcome or are not an issue are attractive projects for infrastructure lending. And this could be either because a particular project doesn't have these features or because the PPP happens at a stage when these have been done, where these risks have been mitigated.
Okay.
So banks or other lenders coming in at the right time or in the right sequence or with the right risk mitigation measures taken by other institutions, I think that's going to offer a way forward on PPP, where we could have good projects and have good loans too.
Okay. I think that's all we have time for. Thank you for tuning in to BQ Prime. I think there we have it, the key outcomes and the learnings we have from this budget. Stay tuned to BQ Prime for more updates on economy and policy, and we'll be right back with another episode.